Welcome to SS2 Accounting. Today we deepen our understanding of the cost of production, focusing on the distinction between prime cost, direct cost, and overhead cost, indirect cost. This is fundamental not only for manufacturing accounts but also for cost accounting. Understanding where costs come from helps businesses price their products and maximize profit. All costs in a manufacturing business can be classified as 1. Direct cost, prime costs that can be traced directly to specific units of production. 2. Indirect costs, overhead costs that support production but cannot be easily traced to specific units. Prime cost has three components. 1. Direct materials. Direct materials are the raw materials that become part of the finished product. In dairy production, cassava, palm oil for processing. In shoe manufacturing, leather, rubber, thread, glue. In textile manufacturing, cotton, synthetic fiber, dye. Formula: direct materials equals opening raw material stock plus purchases, closing raw material stock. 2. Direct labor. Direct labor, also called productive wages, is the wages paid to workers who physically transform the raw materials into finished goods. Dairy plant workers who process cassava. Shoe factory sewers and assemblers. Textile factory machine operators. Note: factory supervisors and foremen are not direct labor, they are indirect labor, factory overhead, because they oversee production without directly working on the product. 3. Direct expenses. Direct expenses are costs directly attributable to specific units of production that are neither materials nor labor. Royalty payments: if a business pays a patent holder a royalty per unit of a product manufactured. Subcontracting: if specific components are contracted out at a price per unit. Direct expenses are rare. Prime cost is usually dominated by direct materials and direct labor. Overhead costs are indirect costs, they support the manufacturing process but cannot be assigned to individual units. They are divided into 1. Factory overheads, manufacturing overheads. Indirect labor, factory supervisors, quality control inspectors, foremen. Factory rent, rates, and property taxes. Factory power and electricity. Factory fuel, water, and utilities. Depreciation of factory plant and machinery. Factory insurance. Factory repairs and maintenance. Factory lighting. 2. Administrative overheads, period cost, not in manufacturing account. Office salaries, accounting, HR, management. Office rent. General office expenses, stationery, telephone. Audit fees, legal fees. 3. Selling and distribution overheads, period cost, not in manufacturing account. Sales team salaries and commissions. Advertising and marketing. Delivery cost, packaging. Depreciation of delivery vans. Key distinction: only factory overheads go into the manufacturing account. Administrative and selling overheads go into the profit and loss account. In larger manufacturing businesses, overheads must be allocated, distributed, among products. Overhead absorption rate, OAR, overhead cost per unit of output. OAR equals total factory overhead / total production volume, or direct labor hours, or machine hours. Example: if factory overheads equals 100,000 Nigerian nairas and production equals 10,000 units, OAR equals 10 Nigerian nairas per unit. WAEC may test the concept but rarely requires complex OAR calculations at SS2 level. A cost statement shows all costs in a structured way. On screen. Statement of cost of production. Nigerian naira. Direct materials used XX. Direct labor XX. Direct expenses XX. _________________. Prime cost XX. Factory overheads. Indirect labor XX. Factory rent XX. Factory power XX. Depreciation, machinery XX. Other factory overhead XX. Total factory overheads XX. _______________________ Works cost XX. Opening WIP XX. Less, closing WIP XX. _______________________________ Cost of goods manufactured XX. Administrative overhead XX. Selling and distribution overhead XX. ____________________________________ Total cost of production XX. Worked example, separate direct and indirect cost. On screen. Lagos Furniture Ltd for the year. Direct materials, timber, nails, varnish 200,000 Nigerian nairas. Wages of carpenters, direct labor 80,000 Nigerian nairas. Workshop foreman salary, 30,000 Nigerian nairas. Workshop rent, 24,000 Nigerian nairas. Workshop electricity, 12,000 Nigerian nairas. Office manager salary, 40,000 Nigerian nairas. Depreciation of woodworking machines, 15,000 Nigerian nairas. Royalty on patented joint design, per unit 5,000 Nigerian nairas. Prime cost equals 200,000 plus 80,000 plus 5,000 equals 285,000 Nigerian nairas. Factory overheads equals 30,000 plus 24,000 plus 12,000 plus 15,000 equals 81,000 Nigerian nairas. Works cost equals 285,000 plus 81,000 equals 366,000 Nigerian nairas. Admin overhead 40,000 Nigerian nairas goes to P&L account, not manufacturing account. Summary of cost of production, prime and overhead. Prime cost equals direct materials plus direct labor plus direct expenses, or direct cost. Factory overheads, indirect rent, power, indirect labor, depreciation, insurance, repairs, go into manufacturing account. Admin overheads, office cost, not in manufacturing account, go in P&L account. Selling overheads, advertising, delivery, commission, not in manufacturing account, go in P&L account. Key, factory supervisors equals indirect labor, overhead, machine operators equals direct labor, prime cost. Works cost equals prime cost plus factory overheads, then adjust for WIP to get cost of goods manufactured.